Hi, folks. Richard Curtis, CF Petroners and host of the Petroners Podcast. Today is January 15th, 2025. I am headed to the National Western Stock Show for the PBR bull riding finals tonight. And I will say that it is 2 weeks into January. We had the CPI print today. We have $80 oil. And 2025, 15 days in, is shaping up to be a rodeo and a half. So I was very optimistic in terms of what I heard actually from Chris Wright in his testimony today in his hearing on Capitol Hill was absolutely incredible. He did such a great job with a lot of senators were really kind and asking him great questions, but there were a few that were just pushing back on him pretty hard. And Chris Wright sailed through it with just grace and excellence and such dignity. And he actually talked to the issues of nuclear, and he knew the data and he knew the stats, which was incredibly impressive. And that makes me very optimistic in terms of what Trump and his policies mean for energy, for lowering energy costs, for bringing manufacturing to the U.S. But all that being said, I am gearing up to do a talk tomorrow morning at the Denver Earth Resources Library for DAPL, the Denver Association of Petroleum Landmen. And this is a breakfast talk at 7:30 in the morning, folks. You should sign up. And I've been going through a ton of data, 150 slides worth of data, looking at truck tonnage, looking at diesel demand, looking at gasoline demand, looking at home prices, looking at housing starts. You name it, I've been looking at it. And what it seems to be is that we're sort of at this tipping point. Yields are huge. I mean, today we have $80 oil, and we have the stock market ripping higher, or stock market being a little bit higher because the stock market's been selling off because we've had yields pushing, that 10-year yield pushing and flirting with 5%. And so everybody's really anxious about what yields are going to do and what this administration is going to be. But really, the reality is that we have inflation now, and it's incumbent upon people to analyze the market as the inflation is from now. So the inflation read came out today, and it was 0.1% lower than expected. So everyone cheered because they want the Fed to lower rates. Well, actually, there were several things that moved up in the core of the inflation. We still have housing above 4%. We still have services above 4%, and we still have electricity prices at 18 cents a kilowatt hour. So major things for the average consumer when you have 3% inflation, or north of 3% inflation that's going up. And something that folks that will hear and see tomorrow when I give my talk and presentation is this chart that I like to use, looking at Fed's fund rate, looking at oil prices. So interest rates, oil prices, unemployment, and actual inflation. And there's a direct correlation between the Federal Reserve lowering interest rates and inflation actually rising. And it's very, very frustrating that we don't have more talk within the stock market or the Federal Reserve about the normal average consumer who is getting annihilated by inflation. So with that, folks, I'm fired up, and I will talk to you soon. Make sure to listen to the latest Petroners podcast. This is the talk and presentation on higher yields, on higher oil, and the talk and presentation I gave at the Colorado School of Mines, folks. So talk to you soon. Bye.